First estimates for third quarter GDP are out today. What is that number and what is it relative to your expectations?
Hi, Susan. The third quarter GDP print came in stronger than I expected, up at 3.5%. That's still a little bit down from 4.2% growth in the second quarter. I think it's very important, though, to understand that there's really no such thing as GDP. It's a number that is like a whole stream, a whole group of streams coming together. And I think particularly in today's number for the third quarter, we have to look at those individual streams to get a sense of what's going on. And what I mean by that is when we look at real consumer spending, which is the bulk of GDP, that was very positive, stronger than expected, 4.0%. But two areas were fairly weak. One was business investment, barely growing at all in the third quarter, and the other was residential investment. That's new homes and renovations and things like that, and that actually declined. So consumers are in pretty good shape here, but some of these numbers in the third quarter GDP should give us some pause and really say what's going on in the business sector, looking a little bit weaker than expected, and certainly the housing market. We're getting more and more data on housing that's looking a little bit soft.
Robert, getting back to the business investment, you would think with the tax cuts that we would be seeing more business investment at this point.
That's exactly what we did see in the first half of the year. The first quarter numbers were good, the second quarter numbers were good, and the third quarter numbers went sideways. Now we'll look and see if this pattern continues in the fourth quarter. Do we get a little bit of a snap back after a third quarter pause? Or do the numbers continue to be weak? So this, I think, is really setting the stage for a very important fourth quarter GDP number to see what the business community is doing.
Robert, let's talk more about housing. Since the midsummer, we've been talking about a housing slump. What are we seeing at this point?
Yeah, we were seeing that in both the existing home numbers, home sales numbers for September, and the new home sales numbers for September, both declining. They've been trending sideways for a couple years, and then over the last 3 or 4 months, both of them are going south. I think some of that is due to the hurricane activity in both September, and then in the October numbers, we'll see that as well. But hurricanes and bad weather doesn't explain all of it, because when you look at the census regions, the 4 big regions, the South is obviously impacted by hurricanes in September and October. The Midwest not, the West certainly not, and those regions are also looking a little bit soft.
How about the next Fed meeting? Let's move on to that. What do you expect them to be talking about at the next Fed meeting?
Yeah, that'll be coming up in early November, and we expect the Fed to sit on their hands and do nothing, continuing that cadence of 125 basis point increase every other meeting. So we had the last increase in September. In this upcoming meeting, they do nothing, and then they increase again by 25 basis points in December. So again, on track for that every other meeting, gradual increase. The key word there is gradual. You're hearing that a lot from various members of the Federal Reserve when they speak. They use that word gradual to talk about this cadence of a 125 basis point increase every other meeting.